Good morning, good morning. Welcome. Thanks for joining this morning on a beautiful Monday, October 4th. We're entering into October already. Halloween just around the corner. Wow. So, some big moves in the market. Have you guys seen what's been taking place? I hope you guys have been paying attention because something really, really dramatic took place last week in the markets. So we're going to examine that. Okay. Welcome, welcome. Nice to have you all. If you can hit the like button for me, that would be nice. That'd be a nice way to start the session. Hit the like button, and then we'll get things going. As everybody starts to drift into the room with us. So we're going to take a look at the CFTC report. Going to look at the latest data from the banks, see what they say, see what we can take from it. Good morning. Nice to see you all. The volume is very low. Put your volume up. Does that work when you put your volume up? I guess I have to talk a little bit louder. Is that better if I talk a little bit louder like that? Or I'll just put the volume up just a little bit like that. How's that? If I put the volume up like that, does that sound better? Let me know how the volume is on your end. I'm going to try to keep my levels good on my end. All right, so welcome. And so we're going to start by taking a look at gold. All right, we're going to look at these positions and see what's going on here. Gold, what do we see with gold? So the first thing that I'm noticing here is that if we take a look at long positions, we can see over the last multiple weeks what has been happening with long positions. They've gone from 299, 311, so they're tipping over the 300s and now coming back under to 293. At the same time, if we take a look at the short positions, what do we have here? Back on August 10th was the highest that we had positions. August 10th was 108, okay? So if we take a look at gold and we look at August 10, we can see August 10 was right after this massive drop. So remember what they were doing there, okay? They were luring retail traders into going short. Do you remember that? We spoke about that. We did a session about it. This massive spike to the downside was the banks luring retail traders into going short. So they lured retail traders into going short, and then immediately they started closing off their short positions because they had no intentions in pushing price downwards at that time. Okay, but that's what they did. At that moment, they were pushing it down, okay, to lure them in. So they lured them in, then they reduced their positions from 108 to 92, 88. Now, what's been happening? Okay, since August 31st, we've seen a slight increase. Okay, August 31st, which take us to the highs of price. Okay, now we're at the highs of price, and what we're seeing is the banks slowly increasing their short positions from 94 all the way now to 125. So what is the goal here? Why are they increasing their short positions now? All right, we know the reason why they added those short positions previously, but why are they adding them now? So my guess would be, when we look at the rest of the markets, what we're seeing is, in terms of the Kiwi, Aussie, Euro, Pound, we're seeing evidence starting to build that price is going to be heading lower. Okay, so this leads me to suspect that it's likely price is going to go lower on gold as well. All right, so I sent a post out in the Telegram channel, and I laid out some of the pieces of evidence that suggests that gold will drop. So I hope you had a chance to look at that, because that's vital information for you to know, to be able to spot the reasons why we think gold is going to be heading lower. So we look at the coloration of the cells, we can see that they've been neutral, and now they're just going slightly into more bearish territory, okay, just slightly. So keep an eye on that. I want you to be focused on that, because as this continues to play out, I want you to watch to see what ends up happening in this area. All right. So gold likely to head lower over time is what I'm seeing. All right. Now we have oil. And we've been talking about oil for some time now about what we were expecting from oil. Okay. And in a fairly recent level 3 session that we did, we spoke about what we were expecting from oil. Okay. Price contacted a very important area of demand here. Okay. We've been talking about this for some time. The institutions created an area of demand on the monthly chart. Excuse me. And now we are seeing that price drop down into it, and it is slowly responding from it. All right. Now, as a reaction to that area of demand, price played out as we were expecting if the banks were to continue buying from this area to force price up. And so for that reason, we had weekly targets up here at 79.11. And now if we take a quick look at oil, we can see that price is just about hitting that. Okay, 77.84. We're very close to it getting there. Very close. So what we believed was going to happen is happening. And we do suspect that price is going to be heading even higher over the longer period of time. So looking at the positions, we are seeing that longs are the more aggressive side. Okay, you take a look at shorts and you can see that they're not doing very much with their short positions. Okay, they're not really focused on their shorts. Yes, recently they just bumped them up from 150 to 153, but that's nothing in comparison to what we're seeing in terms of long positions. Okay, so longs are the more aggressive position, and we can see with the coloration of the cells here, they are starting to turn green, okay, for bullishness. So now price is playing to the upside, and over time we suspect that price will respond to this area of supply that we have here, and there'll be some kind of a reaction, or maybe no reaction at all, and it'll just break right through. But we do have targets even higher up on the chart. Okay, so over the very long term, we expect price to continue going even higher. Okay, so next we have the dollar. And with the dollar, what we're seeing is, look at long positions, okay? Look at long positions. Increasing, increasing, increasing. Now, we saw this coming with some certainty back before or right at the point of contracts expiring. You remember that? You remember we did an erosion report? We were talking about the contracts expiring. I did a video lesson on it. Okay, I posted on YouTube. If you haven't seen our YouTube channel, you have to find it. Okay, we have links all over our website, whiteoakfx.com. Take a look at the video lesson that we did on contracts expiring and how we were able to spot what was likely about to take place with the dollar because of this. So what was taking place here? Well, look at the positions here, right? Back on September 14, we had contracts expiring. So what did that mean? That means that the institutions need to get out of old contracts and into new contracts. And many times what they'll do is they'll use contracts, the expirations of contracts, to exit out of a position and prepare to do something else. And so look what happened here. Okay, these are short positions. What took place with the short positions? We can see that they dramatically closed them to such a state that they became very cooled off. All right, look at those short positions, very cooled off. So right before contracts expired, they cooled off their short positions, which led us to suspect that they were going to rally price up. And so when we look at long positions, they added from 34 to from 33 to 34, 36, now 45. Okay, and what do we see on the charts? Price rallied straight up. Okay, price rallied straight up. But not just that. Okay, something very important took place here on this chart. We had a significant area here that we needed to surpass with price action, and the banks did that. The banks took out that area with this latest rally. So leading up into contracts being expired, they reduced their short positions and they increased their long positions enough to remove this area that we wanted to see taken out. So that's significant. That's very significant. And the reason being is because now that the area has been removed, it opens up the floodgates. All right, the floodgates are open. If all we need is some momentum to come back into this market, which is what we're waiting for, and this can easily rally with a lot of momentum moving forward. Okay, so that is what we are watching, and all the signs are there. All the signs are there. Picking up momentum on long positions, shorts are being cooled off. Everything is there to suggest that price is going to start rallying in the long term. Okay. Hit the like button if you haven't, and subscribe. Make sure you subscribe to our channel so you can get the future sessions, okay? Aussie. Look at Aussie. So remember what I was talking about in terms of gold, okay, and the euro. Remember what I was saying. Now, let's take a look at positions. Remember when positions were back at the 117,000s? I said they were going to start taking profit on those short positions, which they did, which fueled a move to the upside, okay? Now, look here. Contracts expired September 14. And again, what are they doing with their positions here? Okay, they went from long positions being aggressive to being neutral. Okay, you see how blue that is? That means their long positions are cooled off. That means the banks are not focusing on accumulating long positions. That's what that means. But at the same time, they were focused on taking profits on short positions. So they weren't focused on accumulating longs, but they were also not focused on accumulating shorts because they had already accumulated shorts and then they took profits on those shorts. So where do we go from here? Well, I will point out one thing, that if we look at the all-time largest amount of short positions that the banks ever held, it was recently at the 117,000s. Okay, so for there to be fuel to the fire to push this down, we need some wood to toss in, right? If they're already maxed out, then there's nothing to toss in. So we need them to start taking profit and reduce these positions before they can start accumulating again. I don't think they're there yet, and the charts would suggest that they're in no rush. Because when we look at the charts on the Aussie, there is a lot of obstacles. There's a lot of obstacles to get price to move further down. All right, you look at the weekly chart here, there's a lot of obstacles. Now, I believe over time we're going to be seeing price do this, but under what time frames, that is the mystery. So this is a chart that I'm not interested in trading right now, but we will be watching and learning from it as price plays out. Okay, USCAD. Here's another one that is a very tricky chart. Okay, very tricky chart to read and not one that I would be trading at this point. Right? But if we focus on the positions and take a look at what we see, we can see that since contracts expired back in September 14, what do we have? Look at this. Short positions. Aggressive to cooled off. Similar to what we saw with the dollar, right? Look at the sentiment. For several weeks, the sentiment was somewhat bearish to neutral. Okay? Now what has that turned into? Neutral to bullish. All right? And this bullish sentiment has been holding for 2 weeks. That's pretty decent. For me, once a sentiment holds for about 3 weeks, it's in. It's locked in. It's locked and loaded. Okay? 1 week is not enough. 2 weeks, it could be just, a temporary thing. But 3 weeks starts to really solidify for me. This is what I've seen when studying the positions of the banks. 3 weeks means it's locked in. So we see bullishness all across the board. All across the board. Nothing but bullishness. But the thing is that the chart is not showing us anything high odds in terms of trading, okay? Price in the middle of the ocean, we talked about this many times. So when price is in the middle of the ocean, you got to wait for the winds to come in. Without winds, there's not going to be any movement or momentum on the charts here, Okay. Could it contact this area of demand and then we see price rally from here? Yes, sure, that can happen. But the dynamics of the charts do not suggest that that's exactly what should be expected. Okay. So this is why I would stay away from trading this chart. Alrighty. Now we have the US Swiss franc. So this one, they've been increasing their longs as well. Longs are well above their average size. And shorts, look, cooled off. Same thing. All right, we're getting the same signs. Look at the net positions. Bullish. How many weeks has it been sentiment bullish? 3 weeks. Locked and loaded, right? Everything's bullish on this chart. Now, we are responding to some supply, which is why we saw a push to the downside. Okay, look at that. Contacted supply and now pushed. What did we say when price contacted demand? All the members of the school should know this. We've written this in our Rougeau report. We've outlined this for quite some time. What did we say? That when price is contacting the demand here, the likelihood for price is to contact supply. And that's from 89.56 to 93. That's a rally and a half, isn't it? Okay. Now we're seeing this reaction from supply. Okay. But what we're seeing in terms of the positions by the banks is a lot of bullishness. Okay. With every dollar pair, we're seeing a lot of bullishness. All right. So remember that. Now the euro. This one's an interesting one. So we got our eyes on this one. Signals are going to be presented very soon. Okay. In fact, we got our eyes on this chart and we are waiting for the trade signals to trigger. Okay. Very, very close. So we look at the euro and what do we see? Remember, contracts expired here. Do we see anything stick out? 186, 189, 195. They're increasing longs. That's what I see here. But take a look at this. Okay. Take a look at this. This is significant. 158,000 for shorts. Look where we are now. 194,000 for shorts. So which position has grown exponentially? You look at the two. It's quite evident that it's the shorts that have increased quite exponentially. All right? And so from 158 to 195, that's massive. We used to be very bullish here. Okay? We used to be very bullish. Now look what's happening. It's getting down to the zero mark. For what? Preparation for a big drop? I think so. I think so. Because just like the image on the thumbnail for this YouTube video, I pointed out that something dramatic happened here on the monthly chart. Okay? Very dramatic happened here. This area has been removed. This opens up the floodgates for a move lower. Okay? We just need that momentum to kick in, and this sucker is going to drop. Okay? It's not going to be very long from now, but all indications are price is going to drop for the euro. Okay, so I want you to be aware of that, because when you look at what the retail traders are doing right now, they are unfortunately in big trouble. Okay, they've had to close off a significant portion of their long positions. We were just checking out these numbers last week. Take a look now. Okay, they just took a massive loss. Okay, they just took a massive loss. Why? Because this used to be like this. Okay, the vast majority of their positions, unfortunately, were long as price was dropping. Okay, so they got in the wrong time and the wrong position. All right, and for what reason? Who knows? Okay, technical analysis, support zones, support lines, Fibonacci retracements, bat patterns, listening to reading fundamentals, looking at fundamentals, looking at experts and what they have to say. There's a ton of reasons why, but it used to look like this. Okay. And now it looks like this. So that means they got out of their long positions down here. Okay. And now they're slowly exposing themselves to shorts as price starts to rally. So what I'm seeing here is that a major area of demand has been removed, and the banks are going to start piling in to more short positions. That's what I'm seeing here. Okay, we're going to see this increasing, and price is slowly going to make its way down. That is the logical outcome of what I am seeing on the charts here. Okay, because if the banks were going to push price up, they would have used this area of demand that they created to facilitate that. Well, if they are removing that, then what's the next logical conclusion? That they are not taking price up at this moment, but they are taking price down. Now, could other things play out? Yes, they could. And we've talked about this several times in the level 3 sessions about how different things can play out. Okay? It can go sideways and then down. It can go a little bit higher and then down. Multiple things can happen. Why? Because when you have lack of trends, lack of momentum, things can play out differently than, what's should be playing out based on what the institutions are removing on the charts. But higher odds price drops rather than rallies. Pound, same thing with the pound. It's going to follow whatever the euro does. You see how it's rallying, just like the euro's rallying. It's the same thing. Okay, it's just going to do what the euro does. If we look at positions, we can see that they're becoming, let's see, from neutral to bearish to somewhat bullish neutral. Okay, it's in between. Longs increasing and shorts also increasing from 39,000 to 55,000. That's a big increase in shorts, 39 to 55. But we're not seeing anything very clear here in terms of the pound. Next, Japanese yen. This one's an interesting one, right? We've been watching this one for quite some time, and price rallied up, contacted the supply zone one more time, and now we are seeing a reaction to the downside. So what's going on here? Well, same thing with the dollar. Remember what happened with the dollar? Cooled off short positions and aggressive long positions. Looked at 82, 78, 100,000. We're seeing signs that this is going to continue higher, but we do have supply in play. So we don't want to just jump in onto a long position. That supply needs to be removed, structures need to be created, and then we would be interested in engaging on this chart. And last but not least, we got the Kiwi. This one should be dropping soon. Okay, it's rallying right now, but we were examining this chart, and if we look in the details of this chart, we can see that shorts are being cooled off since contract expirations. All right, September 14, contracts expired. Shorts are being cooled off, and longs are just holding steady. But the coloration here, green, this is the first weekly green cell. A couple more will solidify this, but we see net positions turning positive, which is a good sign for a move higher, potentially. But the charts are suggesting that over time we're going to be seeing a push lower until we contact demand. Okay, so that's what I'm seeing here in terms of the Kiwi. But what we're seeing with the Kiwi and what we've seen with the pound are different stories. Pounds are suggesting more upside. Okay, with its data, the euro is suggesting that they're building up shorts. Dollar pairs are suggesting that they are getting rid of short positions and accumulating long positions. So there's a lot of information to go by when we look at this information. Okay, a lot of stuff here. So pay attention to those things and watch as this week plays out. Be very careful because they're making counter moves right now. Okay, they made major moves last week, and now price is reversing. So pay attention to that because it's going to get a lot of retail traders to get into positions, and then they're going to turn things around on everybody. Okay, so I want you to be careful with that because this is something that they do quite often. They make a major move in the markets. They lure in retail traders to get in when it's a little bit too late. And then they cause reversal in the market to shake everybody out and then make them think that they got in completely the wrong direction. And then when they do that, they come in and they continue to make the moves that they were doing in the previous direction. Alright, ladies and gents, so that's about it. I hope you enjoyed today's session. And if you did, give me a little like there. I'd appreciate it. Just hit the like button. Make sure you subscribe again so that you get future alerts of our future sessions. And hopefully you can join us and our successes in the markets as we take a look at the data and the supply and demand that the banks are creating and follow along with what they are doing. All right. Thanks, everyone. Enjoy your day. Take care.